Hope you guys are doing well. So I sent out the daily bias really quickly. It's still a little unclear to me. It's not as like textbook as I'd want to see. Just partially because on the higher time frame we have no clear SMT as to where the weekly high and low want to be, and there's not a clear weekly profile. I mentioned yesterday and on Tuesday there's a lack of SMT on this previous week low sweep, so I'm not sure if that's going to hold. I was still targeting that as the draw on liquidity yesterday, but the fact that we just took out this high makes it almost a consolidation reversal profile where we're going to have expansion into tomorrow into maybe this daily bisi. Now we don't have any clear SMT at these highs either. Really, yeah, there's really nothing in here unless I'm missing something on YM. I mean, maybe this one, but it's like it's not. There's really nothing in there that's very, very clear. Anyways, that being said, so I was just looking at the hourly and the 15, and we saw that meaningful manipulation during London, sweeping the Asian low, and we got the expansion out of it. But now at this point, I'm going to measure OTE of this range. This is really the last line of defense, is this inefficiency here. So I'm going to mark this out. And if it's a complete reversal profile, then we'll be targeting London low. But I mean, look how quick this drop was. It's a pretty extremely quick drop, 191 points in like 5-7 minutes. So we got to be careful here. I was looking for SMT to form on the lows. It doesn't look like we're going to get it unless it's like on, yeah, I don't know. This is a pretty displaceful drop through this inefficiency, or sorry, through this bullish order block. So it could be a complete reversal profile. I'm just going to be watching it for now. Did have SMT up here too. If you look at 830 high. 830. Yep. 930 creating the high of the session there. Slight SMT there. I'll screenshot this. The 1 hour highs. Oh, like over here. That swing high. I mean, yeah, probably, maybe. So, you know, for reversal New York Open reversal profiles. All right, yeah, this is. I don't think this is a classic. It's just tanking lower. Holy cow. These ranges are crazy. So if you're using standard position size, you got to zoom out and look at this range. So I'm guessing my daily bias, the short daily bias I had, was wrong. And we're going to be targeting all the way down until the weekly sell side, as I mentioned on Tuesday. So this becomes a draw on liquidity. As you shorted 932 after Sisti, nice. And then the previous day low down here becomes another short-term draw. So let's mark those out on the hourly. So I'm gonna try and flip bias here. Looking at this is previous day low. There we go. And then the current week low all the way down here. I don't even think we're gonna get a retracement off of this before tags London low. Nice fatal. Dan, I love it. We get a retracement short, little tiny inefficiency here, paired with the minute opening price. If we can get back into that. I mean, we're still extremely heavy. Look at the wick being almost closed through. And the 1 hour, obviously, the hourly inefficiency here being completely disrespected. So we're looking at the new low post. Remember, don't forget about time. All right, so here's your retracement. See if we can get above minute opening price and into the IRL. Like that. feel like that wouldn't be a terrible opportunity. But new low, post 10 a.m., right? If we're looking at that consolidation reversal profile. There's no breaker, I don't think, either. The 5, there's this over here. It's not really a breaker, it's a mitigation block. Or not a mitigation block, an inversion over a block, this entire range. See how we trade up into it. But you can see kind of, although my bias was wrong, you can see the time dynamic still working. In this case, we had 9:30 creating the high of session after 8:30 expanded, so we still have the manipulation being put in here. I mentioned in the bias, if we were looking for longs, if 8:30 is expanding here, then I want to see 9:30 drop. I wasn't expecting it to drop this far, but you can still see in a wrong bias scenario, you can still optimize taking a trade here, because in this scenario, like for any bias scenario, you still have two biases technically, right? If we have a bullish bias, we're looking for that open low high close, which I try and focus on. Well, then I'm trying to capture, for the most part, the majority of that expansion range. But you can also be looking at that kind of short-term drop down, especially if there's supposed to be a manipulation leg at a specific time, like 9:30. You can utilize that and then get in and target whatever the short-term draw is. In this case, I would be wrong in the sense that we're still dropping lower, but it's still a valid opportunity. Same thing if we're bearish, if we need to go up before we go down. We're trading through that inversion gap, or sorry, the short-term bisi. So I'd be tempted to just go short here and target. Where's previous day low? Previous day low, weekly sell side. And then obviously the PM session low over here is going to be another short-term draw right there. I don't know if you can see it. Let me make it darker. These relative vehicle lows. Oh, how come I can't grab it? So this is the sell side I would have marked out, okay? All these are time-based. London low, PM session low, previous day low, and then the current week low. All that is time-based. So retracing back up into the short-term inefficiency here. I want to see if you can use it properly as inversion, then I consider going into a demo short just for the stream. I added the DXY unemployment claims data release higher that indicated DXY continue to want to go higher. Let me take a look at DXY really quick. DXY is just chopping. Seeking destroy profile. Nasty work. Yeah. I don't even know what this is. My goodness. Let's say just a messed up market maker buy model. So the reason that, at least for me, I can somewhat of a flip bias here. I was still looking for the drop at 9:30. You can go into daily bias and look at that. But if we're expecting the drop, retracement legs should have less inefficiencies forming than straight up reversals. Right? So all of these inefficiencies here, 1, 2, 3, 4, 5, 6 inefficiencies forming. If we have to retrade above that, either we're extremely, extremely bullish, or we're going to trade all of, basically through every single one, which is quite rare to see. But just using standard price rebalance, then we have to actually trade up to the premium end of each one, rebalance, premium end of each one, rebalance, 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 and then trade up. And you can see this is just a high resistance liquidity run, and we're generating low resistance liquidity on the sell side. and that's why you would expect sometimes we have a deep retracement as high resistance. We tap the order block or the breaker, whatever was missed, and then we come back down and sweep the sell side. So price goes from high resistance to low resistance to high resistance. So in here, this is actually not too bad. But high resistance moves will have deep retracements into order blocks, as well as sweeping stops. So that's what we have to look for on retracement legs. So low resistance is pretty easy to trade where we're respecting order blocks, things like that. And if this is entire order block range, what you normally see is price will just tap into the topmost one, and bounce off of it. If we're in a high resistance move, we're going to drop almost all the way to the lower end of that consecutive order block range, and sometimes even take the stop. So we can take intermediate term lows and high resistance runs and then continue. And that's why it's really hard sometimes to trade those kind of profiles, as you just get stopped out over and over and over again. On short-term lows, intermediate term lows, they can consolidate extra. It'll retrace deeper into discount or premium than you're expecting. It's not fun to be in. I'm watching this breaker in here too on the 15. So short-term premium will be all the way up here. Obviously, we did 30 days today, so anytime between 9:30 and 10:10 would be, at least for me, a validated opportunity to get in. If you respect OTE, I mean, we're holding it right now. Got that gap. Which gap did I mark out? Oh, yeah. Propulsion block? Nah, I don't think we formed one yet. Overall, it's just been kind of a funky week, right? Hourly chart, just kind of consolidating. It's been back and forth draw liquidity. I think Tuesday might have been the best one. Reversal profile. Yesterday, we did the market review. If you didn't watch that, it's posted into the stream recordings. Sorry, not stream recordings, YouTube videos. It was about like 50 minutes long. We did a full market review, then some psychology tips at the end. So I think it's worth the watch if you have time. So we're trading currently up into the 15-minute breaker, which should hold price. I've marked out from the wick to about just eyeballed around 50% of that range. And we should not even trade above 50% of it for its true breaker. So pair that with the lower time frame and efficiency. That's technically your unicorn setup, right? And you can see we're starting to displace through that. So now I'm wondering if my original bias was right, and this is just a crazy manipulation. Do we have SMT in the lows? I'm curious now. We got this random low here. 5 a.m. Let's just see. We're trading pretty far up into the breaker. Actually, I'm going to mark out the entire thing. I want to see how we respect the entire thing. So gap. Short-term premium maybe too. Yep. Short-term premium. With the gap, with the breaker. macro time as well, 950. ES is also wicking into their 745 bearish breaker, as well as a 7 a.m. version fair value gap. Just looking at it this way, the only thing that surprised me is how aggressive and fast that move down was. Bicep, oh yeah. It's just kind of weird because I don't really like that bicep pull there. All right, so we need to see, at least for me, I need to see a quick reaction out of this breaker, some sort of inversion level. We don't have crazy amount of bisis in here, so this looks like a healthy retracement leg up. But yeah, same thing. Like I wasn't expecting this kind of deep retrace or this energetic retracement really into the level. I was looking for some sort of SMT like on the 755 low. If we got SMT there, like on this low, you know, Nasdaq swept it, ES failed to, then that would be a really clear classic protraction profile that I'd be looking for. Now, I wish there was a bullish order block somewhere in here that we could use as SysD, but there's not. It's not even a inversion. Is there a 2-minute gap? Oh, there's a 2-minute gap. Perfect. I may consider shorting it here on the demo, putting stop below the high. See where this candle closes. Any slight retrace. First presentation gap's all the way up here, 933. But yeah, if there was an order block on in this leg here between the 943 and the 950 leg, if there's a down closing candle, right, we displace through that, that'd be a short-term SSD into a 15-minute PD array. You can expect a 1-minute market maker sell model out of that, right? Because the time frames that are paired with the 15-minute is the 1-minute. Nice rejection off the IFVG. So to me, that's an inversion level after we tapped a higher time frame key level. Is there SMT on the short-term lows or short-term highs? I mean, oh, we got PD array SMT between this gap. It's not the best. All right, we'll take a demo short here, just for the stream. I like the reaction off the inversion fair value gap, targeting the low. What is this? London low short-term target. I'll screenshot this really quickly. Obviously, this is not financial advice. Do not copy my demo trades. This is just for stop management and demonstration purposes only. It's called demo for a reason. So for New York Open reversal profile, let me see, let me mark this out. PD array. Middle center line. Okay. So traded into a 15-minute breaker. We held around 50% of it, and this inefficiency, macro time, flipped the gap, a bullish gap, wicked it nicely. So that to me indicates we want to move lower. I want to continue to see it displace. So we should see SIBI's form. I'd favor if that's left completely open. I'm not going to jam my stop into it right now. But same thing with this gap. We should have that closed through completely. Whoops, that's not what I wanted. And then through here, we should see speed. So once we close through this. I'll add another one just like last demo we did. If there's another sibi that we retrace into, short-term low would be target, and then 10 a.m. new low would be target. So like right around anything below this area, if I draw this out quickly, we have this time. This is now where we're targeting both time and price. So that's the new low of the session. We should form that post 10 a.m. But on the day, where's current day low actually? Now I'm curious. Oh, that is current day low. Okay. So ERL, this is London and current day low. SSL. Five-minute order flow. Still bearish. We're holding it quite nicely. Trade up into that gap, etc. I'm expecting a little bit of a slowdown, probably as we enter silver bullet hour. This is quite energetic. So for silver bullet hour on any 8:30 news day, you're expecting consolidation for about 30 minutes of that entire window. It's either going to be the first 30 minutes, and you expect that if 9:30 to 10 created a larger range. Otherwise, it's going to be the latter portion of the silver bullet hour between 10:30 and 11. And I favor if it's the latter portion most times. Looking at this gap too, that should be flipped as inversion. So this should be a future inversion gap. I'll consider adding another one in here too. Trimming stop to like here. I'm not going to do it now. Put at the rejection block high. Determining the IFG, it's just the highest. If you go to the 2-minute, there's a 2-minute gap up there. That was just, I was looking for some sort of inversion level as soon as we tap into this gap and the breaker to confirm that we want to move lower. So yeah, this is a 2-minute. M2 IFG. This is an M515. Breaker. All right, we're already closing through that. If we get one little tap back up into it, then I'll consider adding one more. See if we can get up. Put a limit order on it. And if it doesn't fill, it's nothing wrong with that. You can see even this low probability order block here, lack of a gap, so that's why it's low probability. The wick of there is still being perfectly held. Almost immediate rebalance, basically all the way up into that short-term opening, or sorry, the wick low opens, rebalances, and then drops and closes back. So we're looking for speed through this. I don't even know if we're going to get the inversion gap tapped. So I'm looking for closure. Once we close past this, actually it's technically this swing low, but I'm marking out consequent encroachment of the wick. So once we get speed through there, I trust that that's going to be left as a breakaway gap. See if we can get our second fill. And then I can push this down to the PM session low and take off one at London session. In terms of manipulation leg, I didn't actually draw the fib out. Target, -2 to -2.5. Yeah, we already kind of dropped into that. -4 is that PM session low. So lines up decently nice. And we don't have any gaps forming yet, at least on the 1 minute, 2 minute. We've got this gap forming. So I guess it also lines up with the inversion gap. Another reason why you could be using that as a retracement entry, short term, either first entry on demo or just a pyramid in like I'm doing here. If you're confused by the annotation, this is London and current day low sell side. So for New York open reversal profiles, you got to think about it visually. London, I've mentioned this in the second video if you haven't watched it already, but London low on a New York open reversal profile is always the short-term target. That can mean it's a partial, or that's going to mean it's going to be the full draw. So you can use that to your advantage of, I have a time-based liquidity pool that I'm always going to be targeting for that New York open reversal profile. If I trust it's a high probability, that's the profile we're looking at. And something like this, when we have a timed high right at 9:30, this is going to be, at least in my mind, pretty good example of a reversal profile. So we're going to hold it down to that. And obviously using time of day as well. So post 10 a.m. You can see here it's right at 10 a.m. Have you taken out that low yet? Nope. So we're still likely to run that out. You see some speed hopefully after this on the time emphasis of it's now 10 a.m. and now with price point after we take out that short-term swing low and close through it, you'll see speed as we drop. I don't think I'm going to get my limit order filled here though. I'll leave it on just for purposes of if it does for trace, but it doesn't look like it will. Oh my gosh, if we get this gap to form, that's like we should IO fed this. Short-term low broken with an order block and a gap forming. That's like perfect. I'm tempted to move this down to the PM session low, but come on, give me this. Give me this. Give me this. If I can get this one, this is like a unicorn in the sense of it's a really rich. This should IO fed and move lower if we can get it. Oh, I don't know if we're going to get it though. We got the speed. I'm just now learning how to predict IO fed, so. But I think it's a pretty useful skill once you understand it. But we got that short-term low broken through with energy. Short-term low broken with energy. Fair value gap forming on top of it, paired with the bearish order block here. That's like as best as you can get for a pyramid entry. So this is the entire order block range here. Whoops, that's not what I wanted. This is the entire order block range here. How come I can't get it? What the heck? There we go. Bearish order block. So we got the speed through that level as expected. We got the bearish order block here. And you can see how weak we are. We couldn't even get up into this inversion gap. We closed through it. We failed to even get up into it. We're just holding that minute opening price. And it looks like take profits unfortunately going to be hit without the second sell limit. And it's a reasonable time to move it to break even. We're already 80% of the way there. There's no reason we should deep retrace past multiple PD arrays. And for protection of profit's sake, we've got multiple order blocks on the way down. There's no reason it should deep retrace this far into the range. So you can see we got the new low post 10 a.m. That would be a partial opportunity, time and price. I'm still looking for the price aspect being the London low. So let me put that up in predictions chat. Time-based low. It's not even going to give it to me. I'm bummed out. Got a rejection block in here now, holding. Last down closing candle would be here. Don't need to know it though. I put an ES. Oh, did it? Oh, it did. Perfect. Yeah, look at this. Look at how clean that is. Wicked it, boom, and drops. It's gonna take this short-term low out now. Just wait. Put an alarm on this. So I guess there's another short-term SMT there. I'm gonna take this off because I don't think it'll touch it and clean up the chart slightly. Is it 10:05? So by the next 5 minutes or so, we should see that low taken. I do think we're going to drop further. I think we're going to drop all the way until the current week low. It's not necessary to recapture that entire thing. I'm trying to just showcase for a demo, you know, what's the minimums that we're looking for? An entry? What's the minimums for targets as well. Like we don't have to capture the entire daily range. Although once you work up to it, it's something that's extremely possible and reasonable to do. It's not impossible to capture the entire daily expansion. But just for this and just to showcase, for time guide purposes, what the criteria is for an entry, what the criteria is for exit, and just using the minimums. And we'll probably see it drop all the way into, I expect, the previous day low and actually the current week low going into Friday. It's not, look at it's only 200 points, and we got this 200 point drop from here, 260 point drop like it was nothing. All right, there you go. So there's the business. Pretty clean stuff, right? I'll put this in stream trades if you want it. That'll be the one for the week. And you can see it's pretty similar to the one we executed on last week. But textbook short, I think. Textbook exit with London and current day low. There's not really much more you could ask for. Like almost perfect as soon as we got this. So I'm still expecting to drop further in then. Let me actually put it in predictions too. London low tagged. London low bagged and tagged. Check. Full execution. Posted into stream trades. I don't like this. Top. I feel like everyone who starts charting, you get OCD in a sense of everything needs to be lined up perfectly. Anyways, I hope that made sense. What we can cover quickly. So bias originally was bullish. I was looking for bullish prices. Let's see it drop into this. Wait, did ES take out their low yet? There we go. ES new low as well. I wanted to see, the open, we manipulated, dropped into that, what's it called? The ERL of the 1 hour, so that'd be meaningful manipulation. We expanded up. I was looking for basically something like this. Oops. We dropped during London. We didn't have any I don't think we had SMT there. That's another key point I want to mention. We trade up, form some sort of SMT in here with a retracement leg, and then expand up into the daily volume balance. So with the lack of SMT there on these lows, the lack of SMT on the weekly low, I should have just trusted my gut and then say we're going to move lower, but and then the expansion right at 930 where we're dropping further than those gaps into the range. Well, then now I'm going to trust that as a wrong bias. And I hope it's a skill that requires a lot of anticipation for. You have to be like what did I say in daily bias? I think I was expecting. Yeah, I said there isn't any clear higher time frame SMT, so it's hard to gauge the weekly profile. Still playing it safe and flexible. Good luck and good trading. So into a day like today, I'm still being flexible in the sense of I'm allowing for if my bias is wrong and there's reasons to believe it and there's key points, then I'm flipping bias. Now, the important thing to mention is you cannot flip bias just because it looks like it's trading down too far, or it looks like it can't go any further, or it looks like my bias is wrong. There needs to be, and this is the hard part because you have to separate the emotional side of it of, oh my gosh, it's tanking, or oh my gosh, it's starting to move without me, and the actual logical reasoning of what are the key points as to why my bias is wrong. In this case, timed high, we had the SMT amongst all three of them, here, and here, right? 930 creating the high of the session. We got the displacement through multiple bullish PD arrays. We have a lack of SMT on the lows. Okay. We also have, I'm trying to find. So the breaker on 15 minute, the 1 minute inefficiency, which retrading up into it. I mean, perfectly, like what time is this? 9:51. Magic time. And then as soon as we close through that, I'm going to enter short. I missed a little bit of it. I wanted to short maybe on this 9:53 as we retraced up into there. But I'm still happy with that. Over, I don't even know how many points that was. Like from here to here. 128 points. I mean, for those who care about it, you should not care about the point range. I'm just showing you execution purposes. But do have a bearish order block here. I think that's going to be retraded through, though. We missed that gap. 5 minute. Yeah. So we're taking up London low is a discount array. So after you expect discount, what you can see as a result, maybe a short-term retracement into a premium. So we're expecting if we trade through this gap, or sorry, through this order block, it's not a big deal. I'm going to be more focused on that inefficiency on the 5 right in here. Extend that out. If we start to trade through that, then I would say, okay, we may be moving back up. But short-term retracement into discount is not, or into premium in this case, is not unreasonable. It's actually expected. If we continue to sell off, well then that's an example of being wrong, but it still works in your favor. So this is the kind of flexibility you want to have. Same thing with that pyramid entry. I was wrong in the sense of it never filled, but it's still good to be wrong in that scenario because the price is still moving towards your TP. So missed the fill there. We got the IO fed on ES with this gap, and it didn't reach it on NASDAQ, but you can see like on ES, look how clean this delivery would have been. And if you can get these kind of IO fed entries, they're so good because you can place a tight stop, nice entry, and pretty clean exit paired with time, and it's gonna be beautiful. But like, so IO fed, the way I like to spot it is a short term drop or a drop through short term low, like here. Okay, we have this inefficiency that's forming as well, and if the order block is in close proximity, well, then you're expecting all 3 of those to hold price. And if it wicks up into it, you're going to put a limit order demo right at the wick high of this candle. Also notice how clean the inefficiency is. It's not like there's volume imbalances here or here. It's actually a really good gap in the sense of it's just a small, tiny inefficiency paired with the order block, paired with the short-term low being broken. So that's how you can anticipate IO feds. Institutional order flow entry drill. So look, we're not worried that it's trading through here. I'm not freaking out. It's expected that we got that retracement back into the 5 minute gap. I'm going to mark out the 5 minute sibi so you can see it. So there's no reason to just think, oh, it's going to completely reverse here. I'm not looking at that as a SysD. I'm looking at it as potentially just a retracement leg in a premium. If we start to close through this, obviously, then I'll consider flipping. But also notice the formation of the gap. That's a strength indication. First time I see a fast market maker sell model leg on the 5 minute. I'll add this to the journal. Exactly. Yeah, it's a good thing to study. Make sure to mark out the key times, key levels, all that stuff. But you can see how perfect London low swept it. I'm glad I didn't move it to the previous or the preem session low. Let me retrace back off. And you know, at this point, turning off the charts and just being done for the day is the best thing you could do. Like, and that's why one setup, one trade per day. I mentioned this yesterday on the market review. One stream per day, or not one stream, one trade per day is the best way to look at it. It forces you to take the highest quality setup. It forces you to deal with greed. If you're a greedy person, that it forces you to just turn off the charts and not go for more. It forces you as well to deal with any losses instead of trying to cope with over leveraging and over trading. And that's a good way to learn. It's a hard way to learn, but everyone has to do it. Also, I got a comment about this last time, but how do you expect speed? I mentioned it in the stream last time as well, but PD arrays and inefficiencies especially are order blocks. Order blocks. I can't speak today. Hold up. Let me drink some water. Inefficiencies are speed bumps in price. So any level that are opposing the current draw on liquidity should be used as inversion. We already know that. But also should slow down price. And once we close past it, should propel it. So in this case, we got this inefficiency. We wicked through it a little bit. We dropped, closed below, propelling price lower. Same thing with this gap. We closed through. We couldn't even get up into it. That shows you how weak we are. Same thing with this. This becomes a bullish order block, or was originally. It'll become an inversion. But as we close through that level, I'm marking out consequent encroachment of that short-term low. Once we close through that, we'll see the speed as a result. Last time it was like perfect. We got that clear drop. And in this case, we're trading through the 5-minute sibi, so it may want to reverse at this point. But great reversal. You can see at what time we formed the low at. Make sure to mark that out. What time we formed take the sell side out. What time we formed the entry at. Multiple opportunities to get in after that. And normally I favor this kind of entry instead of just shorting in here. There's nothing wrong with shorting in here, but I like to see some sort of confirmation that we want to move lower. I'm fine with sacrificing a little bit of this, but then I have a better stop placement, a better entry most times. I don't know, what was the R on this? About 2-1 maybe. Yeah, good little 2-1. Let me scroll up and see. What helps you stay so patient? I think it's just the trust in the model. I've seen it so many times over and over again that it's, at least for me, it's, I have very specific criteria I'm looking for, and it's textbook. Like, this is almost, you go and look at the stream trades from last week and look at the execution in there. It's very similar. I don't know if I can post it in here. Yeah, it's a little too large, but if I screenshot this, it's really low quality. But I mean, look at the similarities between here. I shorted a little bit too early last week, but inversion level, as soon as you traded through that, I went short, and then pyramid into whatever the target was post 10 a.m. So when you see it over and over again, I think it's easier to say disciplined and patient hunting setups. And I know, like I mentioned earlier this week, right? I know there's going to be a setup this week that matches my criteria. I know there's going to be at least one or two. Monday, I'm not worried about it. Tuesday, we had an opportunity. We streamed. I think we streamed on Tuesday. I'm trying to think. Did I forget? Oh yeah, Tuesday was the swing to Z day, where we kind of just traded into the range, but then eventually it was a New York Open reversal. It just took a while. But yesterday, no stream. We did a market review. I'm not worried about it. It's a day before an 8:30 news driver. And then look, Thursday, 8:30 news. I was wrong on the bias originally. And even if you were wrong on the bias or looked at mine, staying flexible and able to adapt and look at, okay, what's actually showing you in the market. Not having any expectations is the key point. So just because it's an 8:30 news day, we can't expect to find a trade. And just because, yeah, that's really the main thing. Can't expect a trade. But I know, I've seen it so many times on the week. I know that there's going to be something that matches my criteria on what I want to trade and what I like to trade. So that helps staying patient, I think, is just not forcing it. You literally, this week is a prime example. You don't have to show up on days that aren't going to print. I'm not worried about it. Even on like yesterday, there was somewhat of a clean sell during, I'm trying to find it in here somewhere. There's a clean sell within the macro time, and we argued, okay, you could be looking at this, but I don't think it's optimal since it's outside of really any entry criteria that I would have liked. So I'm not looking at that as a missed trade. I'm just looking at it as, oh, it's another confirmation that my model is going to be there this week. And then here, yeah, got a somewhat textbook shorting opportunity into there, and that would be done for the week. One trade on the week, you're finished, right? So that's why I cannot emphasize enough. Go in and study 30 days of price action. You can go back 15 days and forward 15 days. You can just go forward from today, 30 days. You could go back just 30 days in the past and screenshot it. But when you see the higher time frame down to the lower time frame, you mark all those up and you see it over and over. You look at the price. You say, okay, on these days, I know my setup's going to be there. You count how many days per the week minimum your setup's going to be there. What kind of entries are going to form? How is it going to be relative to time? It's that's how you form the best amount of trust. And that's, I think, a lot of psychological issues at the beginning can all be conquered by just having a sound model. I think all of it can, because think about it. Fear is just a lack of certainty. if someone had a magic ball and told you, okay, this is where price is going to go tomorrow, and you walk into it and you see it, well, then the next time that they tell you, okay, this is where price is going to go, that you have this certainty in price. You wouldn't be scared about it retracing. You wouldn't be scared about it doing something that's slightly out of whack. It's just you have certainty. So certainty in your model and trusting that you alone are the only thing you can control in this world. And you know, okay, I'm the only one that I can control my own actions. And if I see a quality setup, I'm going to take that. And that's as much as I can do. I'm hands off after that. Whatever happens, the outcome, it doesn't matter. And that's what you have to pair the discipline of not doing anything outside of your model. That's where the discipline aspect comes in, and then the trust in your actual model to perform exactly how it's meant to function. And this was, I mean, you can go and you can look at this, like how many things in this were textbook. We got the SMT with 830. You can see 830 expanded, so we expect 930 to manipulate. ES here, I don't know if it was ES or YM. Oh yeah, it was ES. No. YM, sorry. SMT with YM, timed high at 930. We drop into it. How, what are I've mentioned this before too, but what kind of entries do we look for on most models? Should they only have two types of entries, either retracement to a short-term premium, or if we have a breaker present, then we don't need to see the drop into premium, but it just needs to retrace into the breaker and pair that with a gap. All right, so it's going to be a breaker plus the inefficiency. In this case, it would just be the inefficiency. This is like both of them paired together. Look at this range here. We drop into, or we trade up into a premium with the breaker, with the inefficiency, with macro time. That, I think, is the best you can get. And then we're dropping into a new timed low. So 10 a.m. formed the new low. And then we're targeting our clear ERL target for a New York Open reversal profile, which is the London low. And I feel like once you understand it, it removes the subjectivity on what to pick, and it removes like the doubt in I don't know what to target. I don't know where to get in. I don't know when it's going to displace to. I feel like those videos have answered a lot of those questions. And the third video will answer more of it, of entries and how to play stops and things like that. And then the PDF will have literally probably everything you ever would need regarding the New York session. I'm expecting it to be somewhere around 15 plus pages, the full PDF, but it'll be everything regarding New York session schematics, profiles, entries, SMT, silver bullet, every single macro on the day during the New York session, news, economic calendar, SMT, all, it's going to have everything. So I'm going to try and condense it down, but I'm sure it's not going to be short in any sense. I don't know when it's going to be released. I haven't finished it at all. I'm only like 3-4 pages in. So earliest I would expect is maybe first week of December. I'm trying to compile all my notes into a coherent example. So we actually got a 5 minute to be. All right, so the 5 minute, we didn't actually trade through the gap. We just kind of wicked into it as expected. Retracing the premium, short-term premium here. We're not worried about it. And then look, it's just dropping lower after that. So that's why this is not a valid SysD. And it's hard to teach, but like that's why you can't pattern anything. You can't pattern SysD, you can't pattern market profiles. Sure, it would be a SysD in the sense of we are trading through, but it's a retracement SysD. You want to be capturing reversal SysDs. So we're expecting the PM session low to be ran out. Maybe even a new low post 1030. When we efficiently fill PD raise after retrace leg. Oh yeah, no, we're not targeting any highs. The VIX is high today. Is the VIX high today? I don't even know. I have not looked. I haven't looked at the VIX in so long. Where's the VIX? How come I can't? Oh, we're on futures. That's why. Is it? Is that high? I don't even know. I don't know. That spike up here was crazy. This is like, I think when we moved 1,000 points on the New York session. I feel like I remember this day. I remember trading this day, and I think my stop was 200 points. And it was a scalp. I was like, okay. I used to trade with the VIX. The VIX used to be what I only traded with. It was the VIX and S&P. I would trade options. I got cooked. I feel like everyone starts off getting torn up. Let me switch over to ICT. Anyways, I'm trying to just look for this short-term low to be taken. If we can reach it right at 10:30, that'd be perfect. I want to talk about this SMT. Pretty uncommon SMT. It's not like there's a short-term high or low that we failed to sweep, but this is like a PDA SMT. So look at this gap, the 934 gap. We failed to get up into it, and then ES does right in here. So technically it is like this would be, if you think about it, this would be a short-term high on a really, really low time frame, like a 5-second maybe. But that would be, that's the SMT there. Okay, I hope you can see it. And I'm sure maybe with YM there's SMT somewhere. I don't think there is. Anyways, PDA SMT. And we just took out the short-term low there. We're looking for that last ERL. We can wait 3 minutes. We got 10:30 rolling up too. But current week low is the draw for tomorrow, if we can get down into there. But I'm still expecting tomorrow to expand. So we're going to have a stream tomorrow. And I can already say, if we keep this up, tomorrow bias will be short. We're looking for lower prices. And we're going to expand into that daily inefficiency that's lower. This, I don't think I marked it out. This gap down here. Or even down into this sell side. So consolidation reversal profile, we're looking for Friday to expand in the direction of whatever Thursday expanded into. So lower in this case. And here is your new, come on. Thanks. New low on the PM session low. Tagged. Screenshot that. Actually, I'll wait 2 minutes so I don't have to spam that chat. And then obviously 10:30 would be the next time window. So we're looking for it to drop another 1.5 minutes into sell side, and then we'll wrap up the stream. In this case, I would not want it to retrace into a short-term premium. We already got this gap up. Retrace in there. I know this is a discount array, but since we're approaching the time zone, I want it to just continue to move lower. And then if we want to retrace after that, that's reasonable. And there's your new low. All right. Screenshot this. Expect a new low, 10:30. Magic. Never gets old. It's just magic. So the reason we would not expect a reversal after London low is taken is simply from the higher time frame bias. That would be part of it. Yeah, higher time frame bias moving lower on Thursday, plus, yeah, that's really the main thing, right? And it's a discount array. Sell side is a discount array, so we're looking for that retrace back into the short term gap. If we close through here, I think this is going to be the weekly high. I don't think that this is ever going to be touched, so this should be the weekly high. So I would be really surprised if we ran this out. If we ran that out anytime between now and next Monday, that's going to be the seek and destroy profile, and I'm not going to be trading that tomorrow. But that should be intact as the weekly high, and we should have either a classic expansion or a New York Open reversal profile into tomorrow, targeting discount arrays on the higher time frame. But then, yeah, so take that sell side, we retrace, we're going to mark out the short-term dealing range, whatever the current dealing range was prior to that sell side was tagged. In this case, we have this range. We got the 5-minute gap, trades up into it. You can see, for the most part, the candle buys are staying within that gap. Mohawks out of it, and then we drop lower, roll over. Now, the 1 minute, I'm sure there's probably some PD arrays here. Not really any gaps that are clear. We got a 3-minute gap there. We tagged. So that's the reason we have that extra wick right up into there. Remember, price isn't random. So just like sometimes it looks like there's it's going a little far, there's something at a lower time frame it's tagging. And just being very precise. I'm actually curious if I mark this out. No. Anyways, this is kind of messy. "30-second out Fed." I wouldn't like this one too much. There's no order block next to it, and there's no short-term low be taken out at the same time. So I don't think this will be used as not. It could be, but I wouldn't like it as much as the one I mentioned over here. That one's like textbook. Before you drop, can you give your point of view on a late entry on short once London low is taken, the second retrace? I would say it's so this gap you could use it as a shorting opportunity. I would have liked to see some sort of either break-in structure, not break-in structure, that's TJR, market structure shift, SysD, or some sort of inversion level that you could use to confirm we're moving out of it. There's nothing wrong with shorting it inside this gap. That's the normal way you look at it. You get comfortable with shorting that and we move lower. I like to see sometimes more confirmation, especially if I'm doubtful that this is going to hold or it's just outside of the window that I normally trade. So you have a couple options. Either short as soon as we get into that gap, which would be here. I'll try and mark these out. So here would be, I don't know why is this on the left. That's one. And then stop would go above here because this is supporting order block next to the gap. Or you could be looking for a SysD, which would be after here. So as soon as we take that out, we also have a short-term low that's broken there. It's not a clear displacement leg, so I wouldn't trust that too much. I like this better. This drop down, also a closure through inversion gap here. And then stop for any of these later entries would be at that short-term high or even this short-term high. And then riding it down into PM session low. So it's still probably net you a good 2R maybe. Or if you trim stop to here, then yeah, 2R. But you shouldn't be trading on R anyways. So yeah, that would be what I would be looking for. There you go. Maddie executed on it. Perfect. Oh, I didn't even see that. Oh, there's an inversion gap right here. Perfect. Yeah, solid. There you go. Textbook inversion fair value gap entry. Using that to short into previous session low. So actually, let me mark this up here. This should be current week high. Actually, no. Oops, I mentioned weekly high. And this should be like kind of guaranteed target almost. I'm certain, almost certain, it should be ran out. Didn't I take your entry? It was a little gun shy, with the SMT inside the 5-minute gap, and IFVG was good for me. I like it. Was there SMT there? Oh, there was, yeah. PDA SMT too. Inefficiency in here. Left it open here. That's a breakaway gap. I don't know how anyone doesn't say this is an algorithmic. Like, I've stopped caring about it, but who cares? Anyways, just boring now. So I'll post a stream recording later today. It'll be as soon as this is finished, I'll start rendering it, and then it'll be uploaded probably by 12 p.m. So if you want to rewatch it, you can. Yeah, tomorrow bias is probably going to be bearish. I'm expecting current week low and then that discount daily imbalance to be reached as well. And we'll have a stream. I think we have 9:45 news or something like that going into tomorrow. And for those wondering, that really has no impact on time-based high or low. That's not really a news profile that I'm worried about or should have any impact. Still looking at 9:30 and 10 o'clock to be that volatility injections, I guess, going into tomorrow. That's really about it, right? Because I think we have orange folder news tomorrow too at 10. Yeah, so that would be the two injections I'm looking at. So journal today, please. It's a really, really good example to journal in both, like screenshot this from higher time frame to lower time frame, but also journal psychologically. That means, okay, if I missed an entry or if you're just watching the demo today, how would you feel taking this? How did you feel watching the stream? And it, like, if feeling FOMO, things like that. So it's good to be self-aware. If you can spot those things early on, it's really beneficial because you have to be both self-aware and have problem-solving skills on how to defeat those kind of psychological issues. So yeah, journal both technically and psychologically. And then tomorrow, hopefully we can get a good, nice setup to finish out the week and shorting into the lower discounted rates. Current draw on liquidity would just be the current week low, as I mentioned. So if we want to get down there, which it wouldn't be terrible if we got into that and into the daily bisi, then that would be the rest of the daily target. I'll post that in the daily bias today. So just to finish it out. Anyways, so get outside if you can. Take care of yourself, and I will talk to you guys soon. Peace.